What's up guys, it's Finance CJ. Thanks for joining me so much for another Finance Friday. Today we're going to be talking about some recovery stocks and why I think it's too early to jump into them. The CDC recently released that they will not be waiving the no sale order. Therefore, the no sale order for cruise lines are still in effect until November of 2021. That means stocks that are on your radar like Royal Caribbean, Carnival Cruise Lines, and Norwegian Cruise Lines cannot sail to or from the United States. Now, this is a big revenue loss for these cruise lines, and that's why I think it's too early to jump back into them. They are not out of the woods, so to speak, yet. They can still risk losing all this revenue and possibly even going bankrupt. Now, I know the stocks have had a little bit of a comeback with people jumping more into recovery stocks, but for me, it's something I'm not comfortable enough getting back into yet. I will not be interested in these companies until they start showing revenue, until they start sailing, until they start showing more bookings, and until they have trips planned. Now, I know some of them have trips booked from other countries, but until it's in the US, I don't see these being viable companies for anyone's portfolio simply because they're not producing revenue, therefore they're not going to be paying dividends, and therefore there should not be much stock growth potential because they have no earnings to back the business up. This is just my opinion. Just remember, I am not a financial advisor. This is not financial advice, and you should do your own due diligence when investing. This is just for entertainment purposes only. To continue with cruise lines, something that goes hand in hand with cruise lines are hotels. Now, what I've seen online is the average occupancy will be about 57% for a hotel for 2021. Now, this is only up 8% from 2020, and that is not good news for investors. This is what people are projecting for 2021, no less. The fact that a lot of people do not see people staying in hotels and taking vacations means that these companies are not going to be making as much money as they were pre-2020. These are just some things to think about, because if they're able to operate and fill about 57% of their hotel, they're only making 57% of the revenue that they were making pre-2020. Now, again, like I said, this is something that I'm not comfortable with. Maybe you're in it for the long term and you believe in the hotel, but certain hotels tend to have high debt because of their hotel locations, hotel building costs, things like that. So I am not investing in any hotel stocks just because I don't feel they have made it through this totally yet. So third is airlines, and airlines are a little bit different. Airlines have not stopped flying. Airlines are continuing to open up, and people are starting to take advantage of the low airfare prices, and especially with people getting vaccinated, they are more comfortable on an airplane. Even though in my prediction video for the year I said airlines wouldn't come back as strong, I believe this is a little bit safer of an investment because they are going to be able to show some short-term revenue, especially with so much pent-up travel demand. What's really going to hurt the airlines is they have lost all of the business travel. Now, companies aren't putting their employees on business trips because it's a safety and health risk. And now businesses are seeing that they don't need to always do these business trips. They can do things via Zoom. That's why in 2020 we saw Zoom increase in stock price astronomically. Now, for businesses to see that they can save money and still get their business done without affecting their revenue, they're going to take advantage of that and maybe cut back on those business trips. Airlines rely heavily on business travel for a major portion of their revenue. Some, it's even up to 50% of their revenue. So if you're cutting 50% of your revenue, and then even the other 50% isn't at 100%, you're under 50% on revenue, it's still difficult for an airline to make money right now. So I'm not invested in any recovery stocks like this personally, and I would be totally transparent with you if I was interested in any of these companies, but right now I do not have any of these companies on my radar, and I do not see myself investing in these anytime soon. Like I said, I want to see the businesses come back strong, and I don't want to see anyone go bankrupt. I'd rather keep myself out of the risk than wait it out with these companies. I don't need to be involved with that. Even though if I do decide I want to get involved into a company like Southwest or Royal Caribbean or the Marriott, these are some of the top of the lines in those fields. However, until I see those businesses coming back with better revenue, I don't feel the need to stay in them long term, and I feel comfortable enough that if I start to see the revenue and I want to invest, I'm not going to miss out on too much. Some recovery stocks I may keep an eye on if I was looking at recovery stocks a little more is the mall REITs like Tanger Outlets and Simon Property Group. These are Class A malls and outlets that have outdoor components, and as people want to get back out into their normal life and shop a little more, they will feel comfortable with the outdoor environment and they will still be going to these places. So these are things that I would look at. I would make sure that you're seeing that the Simon Property Group and Tanger Outlets has been showing their revenue, which I believe they have been. And I think it's just a play that makes sense because it's a balance between the extremes of people staying in and people going all the way out. It's something to get them out of the house and enjoy themselves, but not too much out of everyone's comfort zone. That's why if I was to look at any recovery stocks, it would definitely be those two. Just remember that any business has the possibility of going bankrupt, and before making an investing decision, you should definitely make sure you do all your research to make sure that you feel comfortable in the business you're investing in. And I want you to know the difference between the business and the stock price. What the business is doing may not always reflect what the stock price is doing. The business could be on an uptrend and continuing to get better while the stock price is facing short-term volatility. Don't always think that the stock price reflects what the business is doing. And remember, if you haven't started investing yet, be sure to check out my links down below. If you invest $1,000 with SoFi, you'll get $50 and I'll get $50. If you invest $100 with Webull, you'll get 2 free stocks. Don't forget to follow me on social media, link down below. Remember, I'll be posting every Monday and Friday. Mondays are going to be the personal finance and I may have a guest day. And Fridays are going to be investing style videos where I talk about different stocks and what's going on in the stock market. Thank you so much for joining me, and until next time, good night, guys.